Welcome to Tax Tuesday with the Tax Queen. I am a tax strategist, tax specialist that supports digital nomads, entrepreneurs, and any other nomadic business owners. And we're here on Tax Tuesday, the first Tuesday of every month. And I always go through the questions before that were submitted ahead of time. Sorry here. And then we can get to some live questions. So I hear someone's here joining me from California. Awesome. Welcome. And I'm going to go ahead and dive right in. So I have a few questions that were submitted, and those are going to get answered first. If you're here live, feel free to drop questions in the chat. I do get to those after I have answered the ones submitted previously. All right. First question is, what do you know about self-employed people, artists who sell goods such as t-shirts, jewelry? Would you remain as self-employed or you create an LLC? So biggest misconception is around LLCs. LLCs means you're self-employed. Doesn't change a thing. So LLC is a legal entity. I feel like I'm answering this question or debunking myths around the LLC often, almost every month on this call. So LLC, limited liability company. This is a legal entity filed with the state. Okay, makes no difference. Doesn't change it. You're still self-employed. So let's debunk that myth. I do have some great articles on my website about LLCs, and I'm going to drop just one. LLCs are not special. They do not change your taxes one bit. Okay, you go and register an LLC with your state. You're still self-employed, sole proprietor, doesn't change anything. Schedule C, part of your 1040. So it doesn't matter that you're an artist who sells goods. That's great. Doesn't matter if you're an engineer. It doesn't matter if you're a designer. It doesn't matter if you're doing taxes. LLC is a legal entity. So you're still self-employed. If you ask this question, feel free to drop a follow-up question in the chat. But yeah, LLC is a legal entity, doesn't change taxes. It only starts to change taxes if you have more than one member of the LLC from the start, including spouses. So just be aware of that. Single member LLC, self-employed, sole proprietor doesn't change anything as far as taxes are concerned. All right. Okay. Next question. I hope I answered that, but really it's about the LLC. And I feel like I do get this question almost every month. And I get it even from people who reach out to me outside of this. And LLC is just legal entities with the state. And sure, there's taxable aspects there, but I just want that, reiterate that. I'm currently living in Colorado and planning to hit the road full time for business purposes, primarily business purposes. I will retain a home base and my residency in Colorado. We'll be seeing clients and prospects all over North America for the next year or two. I will have scheduled meetings, and I'm choosing to buy the RV instead of staying in hotels and eating at restaurants and flying all the time. Yes, there will be personal use on the weekends, although I plan to move the RV on weekends to the next city where I'll have the next meetings. Basically, I plan to visit clients in one city per week and move to the next. I'm going to kind of skip ahead here. Under these circumstances, can I class the RV as a business expense? It's not replacing my home, but rather replacing hotels, rental cars, airplanes. So my first question would be no. Or rather, just because you're buying, right, feel like you're buying this RV for business purposes, the IRS doesn't see it like that. And it's fine that you're keeping your home, but you're living in it full time. So you're not living in your house, right? And this is where we start to get this weird gray line. And there's a lot a lot of personal use happening when we're in an RV, right? We're eating our meals, which is personal. We are watching TV, we're browsing the web, we're playing games, whatever. We're talking to our spouse or our children. We're doing personal things, right? Whatever we do on our off time. And so really, in this circumstance where you're going to be using it full time, I would never, ever, ever consider taking the RV 100%, ever. It wouldn't be allowed. And this has actually been proven in court for somebody who sold RV insurance and went around to different events and tried to sell insurance there. And it was completely and utterly disallowed. Okay. So I'd be really cautious. But this is really why I work with my clients on a case-by-case basis. I mean, maybe taking 50% with really, really good records, travel log, who you're meeting, all of that stuff, business purpose, dates, mileage, you name it, all of that, right? So yeah, it's a very, very gray area, high risk. So it also depends on if you're risk averse or not. Um, but I would never ever take 100%. So plain and simple, it would be a huge red flag. But that's kind of my generic answer. Yeah, I'm going to leave it at that. So whoever asked this question, and if you're here, feel free to follow up questions. I actually think this would be a great client, or rather for like a discovery call or consult, to kind of go into it a little bit deeper. But I can share this one blog post that I did write about taking travel expenses that might help explain it a little bit. But yeah, so generally speaking, RV, you're living in it, you're using it a lot for personal purposes, even if you are, going to clients or customers around the country. It's just a huge red flag. Yeah. And it's a huge expense, right? When we think about it, if you buy a motorhome, right, they can be hundreds of thousands of dollars, right? You could buy a cheap one. Sure, there's probably, $50 to $100,000 ones used, right? Or smaller, but you can get into the millions if you get into fancy ones. And I just think of that as like a huge red flag. So, yeah. Okay. Moving on to the next one. We are considering work camping as a retirement option. If we receive free rent for an RV spot and trade for our labor, is the value of the space a taxable event? The answer is yes. So you're bartering, right? In this case, you're bartering an RV spot for work. And so I really struggle with any company or campground or whatever that does this, because a campground who's hiring you to work there, right? Whether you're doing landscaping and maintenance around the grounds, whether you're working in a store, whether you're checking people in, you are given set hours and set days. You are given all the tools you need to do the work, right? So if you're doing groundskeeping, right, they're going to give you the tools, right? They're going to give you a lawnmower. They're going to give you a shovel. They're going to provide that. Same thing if you're working in a store, right? That you have, I don't know, whatever, the products and things that you have to put out. You're given a cash register. You're given details of how and when to do the work. So therefore, you're a W-2 employee, and that is dictated by the IRS. You really are an employee and you should be paid for your work. So yes, if you are bartering a camping spot for work, it's income. But really, it should be a W-2 job. No campground should ever just give you a free spot for work, that you are set days and times. These are the definitions, right? Employee, set day and time, giving you the tools to do the job, whether that is a lawnmower, a computer, whatever, and then dictating, your hours, right? You have to work 20 hours, 30 hours, whatever, Monday, 9 to 2, whatever it is, right? They're dictating that stuff. And this is when we look at it as a contractor or an independent contractor, right? Freelancer can choose when and how they do the work. They provide their own equipment to do that work. So whether that's a computer or the lawnmower, And they don't have to report back hourly, right? There is no hour set day and hour. They can work at midnight, they can work at 9 a.m. It's up to them to get the work done. So this is the big difference. So that's why when I hear this, I know that the campground, whoever is offering you this work camping job, is incorrect unless it's a volunteer position. So yeah. All right. Oh, these are some good questions. So I'm a property owner in California. I want to move to another state as a full-time RVer. South Dakota is high up there. Will California require a state tax return if I spend less than 180 days, even if the property is used by family with no rental income? The family is paying the mortgage escrow insurance instead of the taxpayer. Would the mortgage interest still be deductible? Okay. So, first, I want to bring up the issue of South Dakota. So there's several things in this statement, call it questions. South Dakota, to me, is, and you might not like this answer, a terrible, terrible state for full-timers who are W-2 employees, or even those who have an S Corp, like themselves, they're self-employed with an S Corp. I would never recommend South Dakota. South Dakota has been changing their laws, so it is actually not full-time friendly if you're a W-2 employee or you own an S Corp or self-employed, right? Pick another state. South Dakota is not one to be picked. That's just my first warning. Okay, I've been dealing with this for actually a few years now. Then they changed the laws and they are really, really enforcing it. And this has to do with them changing the laws, and that when you're a full-time RVer, they don't accept a mailbox or your post mailbox, right, which is what you normally have and what you use for unemployment insurance. And when you're a W-2 employee, you have to have unemployment insurance. So many times that this means that you are now pushed to whatever state your company is based out of. And if it has state taxes, then you're going to owe them because now you have sourced income from that state. So South Dakota, terrible, terrible, terrible state. Okay, just giving you that warning. And their laws are constantly changing. They're becoming a little more conservative, which that's not really the issue, but conservative as far as limiting RVers and the things that they're allowed to do. Voting is on the chopping blocks. I mean, there's all kinds of things, right? Just pay attention to that. So I do not recommend South Dakota personally for anyone hitting the road full time. As far as California requiring a state income tax return, if you do not have income sourced from California, then you do not file a state income tax return. And that's the same for any state. Doesn't matter if you're moving from Ohio, if you're moving from Wisconsin, if you're moving from Alabama. If you don't have state income sourced from that state, they should not require you to file a state tax return. Now, if you've been a resident of that state, California in particular, and you all of a sudden don't file a tax return, right? They could question it. They can. It's happened. But yeah, so just be aware of that. As far as deducting the interest, it's honestly usually a moot point because the standard deduction is so high. I see so few people taking mortgage interest on a tax return nowadays. So yeah, normally I would say that doesn't really impact things unless you have really, really high mortgage interest. Yeah. So, I mean, just to kind of reiterate, many people have property, right? Say we have second homes. Sometimes people have in a state other than maybe their resident state, right? It's perfectly allowed. People even have like RV property, right? So they might have several different RV plots where they can put their RV for a little, like park it for a month or whatever. They can rent it out when they're not there. So it's not unheard of to own property in a state that's not your resident state. It's not an issue. All right, last question that I have from prior submissions. If anyone's here live and has a question in addition, feel free to drop them in after I get through this last question. So I'm 100% digital nomad, my job entirely remote as a 1099 contract worker. How are business expense qualified for hardware and the internet? Thinking laptop, monitor, self-service, Starlink. Is there a way to prorate these since I use them 40 hours a week per work? Absolutely. So I wish I had, so it's not really the 40 hours per week. It's really the, to me, more based off of like how much data are you using. So like on a Starlink or whatever. So there's several things happening here. Let's back up. Um, like taking Starlink, okay, if we have multiple cell phone plans, right? So we have cell service for a hotspot, we have Starlink, right? So one of the ways that we can take care of this is pay one via business and the other personal, right? So our cell phone or hotspot is paid for personally and Starlink is paid for by the business, right? I need Starlink in order to connect, and that's what I use, okay? That seems fair. You can also track data. So spend a month or two tracking your data. How much data are you using personally versus for pleasure, right? On our own personal time. And we can take it prorated that way. So normally I'd say 50%, sometimes as high as 70, 75. If you're really, really heavy video and all of that stuff for work, that seems fair. But I would never really go higher than that unless, again, you have two separate plans. One is paid for by business and one is paid for personally. So that's dealing with internet, right? So our hotspot, Starlink, whatever we're using to connect. And then as far as a laptop, same thing. So if the laptop is used 50% for work, then take 50%. If you have two laptops, right? Or your laptop is only used for work and you have a tablet or something else that you use personal, like the work laptop closes, right? Whatever, when you're not working, working hours, shuts down, you don't really open it unless you're working, then it's 100%, right? So think of it that way. That's kind of how I would think about it, generally splitting. So you can definitely prorate the expenses. There are certain things that you can just take, you know, if you need extra equipment, if you need a camera, if you needed that extra monitor to do your work, I don't see why these can't be business expenses. So just keep receipts, keeping records. That's really the important thing. If you wanted to do the amount of data you're actually using, you know, just keep a record of that. Show the month or two that you've recorded it to show it's majority for business. Keep it, just PDF, print it, take a screenshot, whatever it looks like. Hotspots are usually easy because you can go on to like Verizon or T-Mobile and you can see all that data usage and the times, right? So it's pretty easy to do. Starlink might be a little bit harder, but I feel like even then it tells you like the days and times, how much your data you're using. So should be pretty easy. If you have further questions, taking, yeah, business expenses can definitely be split. Just short answer. Okay. I that's all the questions I got ahead of time. So I'm happy to answer a couple of questions if people are live and have something. And you're welcome from Minnesota. And I'm happy to do this. This is for my community, answering Q&A, doing this Tax Tuesday live. And I'm here to serve you guys and to help you. So, and that's great for South Dakota if you are retired. I still, even for retirees, I question it just from the new laws and things that they're enacting and changing, making it more difficult. So just be aware of that. I've had quite a few people that have moved from South Dakota to one of the other popular states. Florida, South Dakota are the other two. I mean, sorry, Florida and Texas are the other two. And I've had quite a few, even retirees, move to one of those states. And retiree, people retire early, right? People retire at 50, 55, 60, 65. So depending on age, and other needs, I just don't ever recommend South Dakota. So just given the way that they're changing their rules and making it difficult for our viewers. So you're welcome, and thank you for attending live. And if you're out there watching this later, um, thank you for doing that. And I will see you next time. The next one is, um, sorry, I didn't put this down. Usually I put it down on my sheet. So the next one is June 3rd. So put that on your calendar, June 3rd, same time, 10 o'clock Mountain Time. And I will see you then. Otherwise, have a great month. And yeah, take care.